Hi, I'm Jim Jubak, and welcome to today's Quick Pick video. Today's Quick Pick is Newmont. Newmont is the world's largest gold miner. One of the things that's interesting is that, well, Newmont has really not participated in the rally in gold or some gold stocks. Here's a chart for last year. You notice peak decline, and then what's interesting to me is this, where the stock has basically gone nowhere from the beginning of the year to now. Maybe we're starting to see some ramp up. And I've got an explanation for this, which makes Newmont a very interesting pick for, I guess, maybe the second half of 2023. Newmont is not a low-cost gold miner. It's not like Barrick Gold. It's probably around 50%. If you ranked all gold miners by cost, it's probably around somewhere around the 50th percentile. It's got huge reserves. In 2019, it bought Goldcorp at a very good price. It's got a couple of really interesting joint ventures. It's put all of its Nevada properties together with those of Barrick and formed a company called Nevada Gold, which accounts for about maybe about 40% of production right now. And production is growing, which I really like. You want a gold miner that's growing production. So they're forecast to do about 2.2, let me just make sure I got the decimal point. Yeah, about 2.2 million ounces of gold in 2022, going up to a forecast 2.7 million ounces by 2027. As I said, though, this is not the low-cost producer, but what makes that kind of interesting is that gold miners have been sort of lagging gold in price increase because gold miners have a large energy component. It takes a lot of money, a lot of energy, and therefore a lot of money to mine gold, to process gold, all that. So when gasoline prices and diesel prices have been high, as they have recently, the margins get squeezed a little bit. If you're looking forward, and say are in a recession where inflation is still relatively high, maybe 4%, 3.5%, which is good for gold. Interest rates have flatlined because the Fed has stopped raising rates, and that's also good for gold because gold competes with treasuries for return. And the last is that if energy prices are going down because you've got a global recession, that would see margins expand at the gold miners. So Newmont is sort of a second tier for me, gold stock. Barrick is my favorite gold stock. Newmont would be sort of second favorite. It does pay a pretty decent dividend, about 3.3% on forecast forward dividend. It's a little higher than that over the last year. And right now, Morningstar says it's about 10% undervalued. So good time to buy. Look for this to outperform in the second half of 2023. If you like this video, please give it a thumbs up. Subscribe to my YouTube channel. It's free, and that way you get notification of when I do the next one. We're doing about 3 a week, not always on the same day. If you want more of my stuff, you can go to my free site. That's jubakpicks.com. It has 3 portfolios, including a portfolio with Barrick in it, and soon to have Newmont in it, or go to my paid site. 6 portfolios, including some options and some ETFs, where I've got some gold ETFs. So, and that's my paid site. It's jubakam.com. You find links to all that down below. Thanks very much for watching.